A few years ago, if you would say, let's print money to make everyone rich, no one would take you seriously. Yes, we can print money, but we should do that responsibly. We can't randomly print money and just give everyone some cash. That's not how the economy works, leave alone capitalism. Remember when Andrew Yang proposed the UBI, Universal Basic Income, and people bombarded him with billions of arguments why that's never going to work? But then 2020 is like, let me prove these people wrong. The Fed literally pumped over $3 trillion into the economy. The government distributed cash to ordinary people. Everyone got their stimulus checks, which they ended up spending on Amazon buying useless stuff. Well, not everyone. At the end of the day, most people had to put food on the table one way or another. That's supposed to cause inflation, right? But it didn't, at least for now. The Fed has been around for over 100 years, and it has created a lot of money since then. However, 1 in every $5 was created last year. Throwing that much money into the economy is supposed to create not just inflation, but hyperinflation. Have you seen pictures of people carrying bags of money just to buy bread, or kids using cash to play around in Zimbabwe? That's what hyperinflation is. So, why was inflation just a little over 2% last year? Why does the Fed keeps printing money even though it knows it can cause high inflation? How has the Fed has been creating the biggest financial bubble in history? When this bubble is going to crush, and how is that going to impact the stock market? We will answer all of these questions and many more. But before we do that, give this video a thumbs up and let the algorithm know that you enjoy our videos, and make sure to comment. And now, let's get right into it. We have already explored how the economy works in previous videos, but let's just have a quick recap. The economy follows a cycle where it expands for a few years, then it peaks and slowly starts falling into a recession. And the job of the Federal Reserve is to make sure that inflation doesn't rise too fast when the economy is booming by cutting the supply of money through high interest rates, for example. And when it falls into a recession, it makes sure that the recession isn't too painful by flooding the market with cheap money to stimulate the growth. When interest rates are too low, everyone jumps in to borrow money, like in 2020. Mortgage rates were so low that everyone who saved enough for the down payment did take a mortgage, to the point where economists are warning us of another housing bubble. So, in the middle of a pandemic, when many people lost their jobs, struggled to pay the bills, house prices are rising. Why? Because when too much money chases too little goods, prices increase, or the value of existing dollars fall. The number of houses in the market didn't change much, but since so many people decided to take a mortgage, the demand increased, which is why prices increased as well. But why is that a problem? Every time we had a crisis, the Fed stepped in and saved the economy by pumping trillions of dollars into the economy or lowering interest rates to the bare minimum. It did that last year. It pumped trillions of dollars back in 2008 to prevent the economy from collapsing, and the crises before that. So, some experts believe that we are living in a bubble that will sooner or later burst and take down with it the entire economy. Take a look at this chart. Since we have abandoned the gold standard in 1971, inflation has been rising through the roof. It's rising as if there is no tomorrow. And with more stimulus bills, that chart will rise faster, especially when the Fed pumped into the economy over $3 trillion last year. A single US dollar today worth just 4% of a dollar in 1914. $100 in 1914 is equivalent in purchasing power to about $2,615 today, an increase of $2,515 over 107 years. This means that today's prices are 26.16 times higher than the average prices in 1914. Will that bubble burst this year, next year, 10 years from now? I don't know, and no one knows. It might just never happen. The Fed successfully kept the inflation at around 2 to 3%. It might be able to do that for another 100 years. And what happens 100 years from now isn't something we should be too worried about now. But let's find out if the stock market is overvalued today, because if it is going to crash, or at least will witness a correction. When the stock market crashed last year, why it suddenly jumped back and started rising? Because the Federal Reserve lowered interest rates to 0% and started buying bonds. A bond is basically a piece of a paper that a government or a company issues that says, if you buy this paper, I will owe you this much money plus interest. But what if the interest rate is 0%? I guess everyone would want to take that kind of a loan. The Fed usually buys government bonds to help the government raise money, but in March 2020, the Fed did an exception and indirectly started buying corporate bonds. This means companies could suddenly borrow billions of dollars at almost 0%. So, no matter how bad the crisis is, these companies could borrow money for free to survive. The problem with that was that the Fed even bought junk bonds, which means that it started loaning money to companies that's supposed to go bankrupt, but survived because the Fed gave them a lot of free money. Think about what happens when the Fed stops giving them money. They will go bankrupt or at least be less profitable, which will drive investors away, which will push their stocks prices to fall. In other words, the stock market is filled with overvalued stocks right now. But that's not all. The Fed even purchased bonds of the largest companies in the market, such as Apple, Microsoft, the Home Depot, and so on. That's one of the main reasons why the stock market rose dramatically. You don't have to be a genius to understand what happens when the Fed stops buying corporate bonds or raises interest rates, for example, which will eventually happen. Of course, that's causing inflation, but the Fed is comfortable with inflation even higher than 2%. Because if it didn't step in to save the economy, the recession could have easily turned into a depression. It would have taken us much longer to get out of this crisis. Inflation is bad, but you know what's more devastating than inflation? Is deflation, when prices start going down. That looks like a good thing, right? Your money starts becoming more valuable. Why spend your money today when it's going to be more valuable tomorrow? And that's the problem. In that case, everyone will start saving. When no one spends, the economy will further get into a crisis. That's why it was very important for the Fed to step in and flood the market with cheap money, because during crises, people are afraid to spend, since no one is certain about tomorrow. At the time of writing this script, interest rates are still between 0 to 0.25%, but that's not going to be forever. Once everyone gets back to work and we reach herd immunity, the Fed will slowly raise interest rates, and the stock market will probably crumble. I wouldn't be surprised if all of the companies that survived just because the Fed purchased their worthless bonds to go bankrupt one after another. And the top 10 companies that make almost 1/3 of the S&P 500 to slow down significantly. It's difficult to predict what's going to happen tomorrow, leave alone a few months from now, but the current administration is focused on another stimulus bill, so the market will probably keep rising at least until the summer. If a correction would happen, it would probably be in the second part of the year, or maybe not this year, because the market doesn't follow any logic. Even if I bring up 1,000 logical arguments why the market is overvalued, the market might take an entirely different direction, but it doesn't hurt to be ready for such a crash. Meanwhile, you can get at least 2 free stocks from Webull if you use the link in the description. If you have enjoyed this video, you will most definitely enjoy this custom playlist that I have created specifically for you that has our most popular videos on business, investing, and the stock market that could potentially change your life. And now, give this video a thumbs up that it deserves and make sure to subscribe if you haven't done that yet. Thanks for watching, and until next time.